Good morning. Welcome to the XM.com weekly market update. And we're joined once again by Peter McGuire, the CEO of XM. Good morning, Pete. Welcome back.
Good morning, Andrew.
Now let's get right into it. Once again, we'll start on the Australian front. Retail sales came out last week. We touched on it last week, and I thought this was another interesting chart. It was down again last month, which was a bit of a surprise, and it's probably the biggest fall, taking out the pandemic back in sort of 2020, 21. It's the biggest fall for quite some time. So it's really telling us how the impact of those higher interest rates are starting to kick in.
Yeah, exactly right. Also, it's post-Christmas, so we've got to be conscious of that. But yeah, it's it's up till the end of Christmas, I should say. But yes, that's the reality and how it moves forward with possible further rate hikes. And I think, when you're looking at the fragility of the consumer, it's I want to see where this quarter takes us, and certainly by mid-year where we get a real, snapshot as far as health and economic health.
Yeah, and I think once again, if you look at that chart, there's going back to like 1990, there's not a lot of down months in that chart. So it sort of shows the resilience of the consumer. But yeah, the mood in the Australian at the moment, at the market at the moment is not flash from a consumer perspective. So it'll be interesting to see what those next couple of months come in at.
Yeah, exactly right.
Similarly, we look at the building permits, and once again, this is only going back over 12 months, but that's effectively 12 months of negative figures. And it just shows the tightness in that market and how the interest rates are starting to sort of permeate throughout the economy.
Yeah, exactly right. And again, it's just a forward-looking data sheet where we're going to see, mid-year, is that going to be a continuation? What impact it's going to have to naturally housing prices? And all I know is this: on a Saturday, Eastern Beaches, there is a incredible shortage from a rental perspective to rent an apartment. That's Sydney. Now, I don't know whether that's a nationwide phenomenon, but it is incredibly low vacancy rates. And it's a war, literally, going to the Colosseum to try and get that rental property, because there can be 30 or 40 people going to an open, and it's just incredible. So yeah, the demand is there, and there's going to be those impacts have got to be, reverberated across the whole housing and the whole property landscape.
It does. And I think in a lot of suburbs, that seems to be the case, because you just hear about it all the time, the shortage of rental property. So that just sort of, in a way, that can, to a certain extent, support the housing market, because if people are coming in, that's going to
live somewhere. Maslow's theory.
Yep, that's right. And once again, I think over the last couple of years, because of COVID, the immigration into Australia basically stopped, and a lot of those people coming in tend to go to Sydney and Melbourne. So once that ramps back up again, obviously that's going to put more pressure on the rental market, but in turn that might prop up the housing market with more people coming in and looking to buy. So it's a sort of interesting space. But you look at those building permits. If there's not that many properties getting built, that's going to actually add to the problems.
Yeah, exactly, which in turn creates more inflation. And the other side of that is, because from a university perspective, and we're right in this, where I live, I'm at Coogee, and we're right in the centre naturally with UNSW, University of New South Wales, only a stone's throw away. All those international tourists coming over to start this semester, and where do they live? And, we joke a little bit, Maslow's theory, but shelter seems to be pretty important to most people. And and you've got to, you need shelter, but if there's a war for, to find somewhere to live, it really impacts the whole demographic.
Yeah, it certainly does. So it's a interesting space. Now, the next chart's a really interesting one. It just gives we won't go into too much detail, but it just gives us a really good snapshot of what's happened in that interest rate market over the last 12 months. So we look back, it's basically the first quarter of last year where all the large central banks started to raise interest rates, how much they've gone up, and then what the expectation is for the rest of 2023, where a lot of them just going off that, it looks like there might be only sort of another couple of hikes throughout this year. But, a lot of it does hinge on those inflation numbers.
Yeah, exactly right. Let's hope that Aussie's peaked out at 7.8. But where we've been in the two reads before that, in the low sixes and then 7.4, 7.8. So we've got the US ready to drop today. So Valentine's Day is going to be a love-in or a bloodbath and a massacre. We're waiting to see that inflation number. You've also got, Andrew, inflation for January at Wednesday, the UK, and retail sales on Friday. So it's a big week for data this week. And naturally, you just put your eye there, BOJ, and that's Bank of Japan for all of our viewers, current rate level, negative 0.1%. And we've got a new governor stepping into the plate. He'll be batter up. And it'll be interesting to see if he is going to be aggressive versus current policy. And if that is the case, to rein in from a inflation number in Japan, what impact that's naturally going to have to Mrs. Watanabe trading the yen.
Yeah, and I think if we look at the next chart as well, it sort of plays into that, where the CPI is increasing at nowhere near the same levels as other economies, but it is going up where it's been pretty stagnant for a long period of time, and even real wage growth has turned into the positive. So does that play into that story of interest rates potentially may have to go slightly higher in Japan?
Well, one would think so, and you've travelled extensively to Japan. I've spoken to you about that previously when you were at Bloomberg, and I go there frequently for karate. And you talk to the locals over there, and we all put our mind back to I think in '89 when I think it's an 8-kilometre bike ride around the palace. Well, in value at the time, I know it's incredible, hard to believe, 8 kilometres around the Imperial Palace in the centre of Tokyo was more expensive from a land value than the whole state of California in 1989. So Japan is an incredible economy to study over that 30-odd year window. What we've experienced has been nothing short of breathtaking on every frontier.
And it's you're right though. You look back at those times where like Japan was the standout, and then they've just had a long period of like stagnation, if you like. So
for decades, Andrew.
That's right.
In January 89, or pardon me, January 90, I think it peaked. I've got my memory, 39,000 odd for the Nikkei. It collapsed to 8,000. That means people just can't understand how a stock index can crater, second largest economy in the world, 80%. So I remember the days you used to buy a watermelon and it was like $100 US for a watermelon, or a mango, or a rock melon was a big fruit to eat in Japan at the time for the wealthy.
Yeah, certainly times have changed. When we speak of stagnation, we look at the UK.
Oh,
I know CPI is still high. At least it is coming down, but the GDP numbers came in. They only just avoided what would be a technical recession, as in 2 quarters of negative growth, but only by the slimmest of margin.
Whisker.
Yeah, but we look at that number and we sort of move on to the next slide as well, which gives us housing prices, which housing prices are coming off, but it's that red line there, the mortgages approved, which is a significant drop off.
Yeah. Oh, it's that chart tells the story for English or for UK property, and the impact you would imagine. And I'm looking forward to, possibly over the next couple of weeks, we'll have some data there for Eurozone, which is a much greater, 10 times nearly size, 500 million population, whether we can see it all across that fabric of the Eurozone, how the property market is performing in like the Germany versus Spain, France versus Holland, what's going on with Italy versus Greece, all of those data points, and what impact naturally to euro.
Yeah, and the next slide just shows it as well. This is like the Halifax index, which gives us a snapshot of housing prices and how much they've changed over time. And it basically is telling us that the average price of a UK house just continually is falling. So I think it's roughly around about around 270,000 pounds now, which is roughly the average price of a home, but heading in the wrong direction.
Yes, exactly. And but remembering, markets, if you look at that peak from 20 to really the period through 22, it's very lumpy earnings. I mean, it's, you know, if you're looking at that from a stock, if you're saying a performance, it's performed very well and nothing goes up forever. And I think that this is the issue that many younger people, that if they think, well, something's going to keep on going and rising, in the long run, probably yes, but there is many valleys and peaks over that frontier.
Certainly is, and that's where the patience comes into it. And sometimes it's very much like, you know,
if you can afford it.
Yeah, that's right. But if you're in the equity market, if you're in some quality stocks, the trick is to do nothing basically, or buy more where they dip, sort of thing. But if they're if their earnings continually improve, their dividends are always strong, then the easiest thing sometimes is to do nothing. But for most people, that's probably the most difficult thing.
Well, that's right. Blue sky.
US jobless claims. This helped the equity market. Obviously, the jobless claims jumped a little bit more than what they had been in the last few months. So obviously, you would say that's bad news, but for the equity market, it's sort of good news because it plays into, in theory, a lower inflation number. Yeah,
well, it's been a very strong January, and I looked. Nasdaq was up nearly 1.5% for Monday. S&P 1.14, and the Dow up 1.11. So that's a positive start to the week.
Yeah, and I think obviously a lot of that is in anticipation of the inflation number coming in overnight to be a little bit lower than what it was last month. So you never know with these numbers; they can move around quite a bit, but that seems to be the expectation. And just finally, I thought we'd just have another look at the currencies. We haven't looked at that for a little while recently, but the US coming back a little bit. But it's sort of interesting when we spoke about this sort of 3 or 4 months ago, and it was the US was unstoppable basically.
Well, that's right. I'm just looking at some notes I've got here, and I'll cover them in a second. But yes, the currencies, since the end of October, start of November, it's been showtime for everything against the US dollar. That's just cratered, and it was just a trader's delight, you know, and probably giving back a little bit of that hot steam at the moment. But yeah, it's been quite a phenomenal 3-month window. Sorry, no, over to you.
No, and I think once again, because it was so strong in that period, like you said a little while ago, it just couldn't go up forever type thing. So there had to be a point where the brakes came off a little bit, and we've been seeing that over the last couple of months.
Yeah, exactly. Just on that headline, CPI expected to decline to 6.3 from currently 6.5. Though there was a report that came out of Cleveland, maybe one of the universities, I think in Cleveland, and it said you'd possibly see a 6.7, I think it was. So, you know, there's mixed consensus, but we're going to hopefully err to the downside. But I've got some bad news if you're a consumer of anything with electricity or with power. And we saw a big move over the last couple of sessions. WTI nearly approaching $80 a barrel for West Texas Intermediate, and you've got Brent now approaching 87 at $86.60 a barrel. So that's bidding up, and we just don't want to get anywhere near that 90, let alone 100. So we'll just have to wait and see. I'm concerned with what's going on with Russia and other geopolitical tensions and balloons flying here and there and everywhere. So yeah, I think this month could be quite interesting how it all plays out from an energy perspective.
Yeah, and I think that inflation number as well, like even if it does come off to maybe 6.3, I suspect the markets may want a little bit more than that just to sort of keep this positivity going. So like once again, if it comes down to 6.3, that's good that it's coming down, but I still think they want it to come down a little bit faster than that, I suspect.
Yes, I think you're right, my friend. So we'll just have to wait for that to drop, and let's hope that it's red roses.
Yeah, certainly a big number. No, we'll find out overnight. But anyway, well, thanks again for joining us, Pete.
Oh, lovely to see you, Andrew. We're out of the studio this week where they're doing a lot of work, and it's an incredible studio down in Chinatown in Sydney. And I go there each week to see Andrew and the team. They're a professional outfit, and I thank you for, again, we'll be in that studio shortly, just doing a little bit of refurb work. You do podcasts there, we do everything there. So look forward to seeing you, brother.
Good stuff. Okay, Pete, thanks for joining us again. And that's the weekly XM.com market update.